You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for the show of shows, at least when it comes to volatility. Yes, it is time for Volatility Views. My name is Mark Longo from the old network, as well as from the website and the email newsletter, all the other fun things that we do, all the social media fun. You know where to find us, all those good places. Wherever you listen, including live, make sure you join us live. Particularly this week, you might want to tune in every Friday at noon Central, 1 p.m. Eastern. We are recording this and streaming it live, of course, on the 12th of October. And what a week it has been. So let's get to it. Let's dive right in. And to help me do just that, of course, also, whether you listen live or after the fact, hit us up, questions, comments. Go figure. I think you guys got a lot of them this week. I know I do. Everyone does. Well, about what's going on this week. So let's see if we could puzzle them all out, hash them all out together. You guys have already been bombarding us with some good ones. Keep them coming. And to help me answer those questions and talk about and just kind of piece together what the heck was up and is up this week, I am joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital. Mr. Rock Lobster, welcome back to Ye Old Show, sir.
Thanks for plugging Carmen Line Capital. I appreciate it. I am good. I'm glad to be here, and I'm watching. You're asking me what's up today, Andrew, and I said the VIX. It's trading 26.5 as we sprechen.
I don't think either of us had that in our poll. It's a spoiler alert for a crystal ball for last week. 26.5, clearly. So spoiler alert, we may be a little bit off at the end of the show, but we shall see. Meanwhile, though, it's not time for the end of the show. It's time to start the show. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do what the name says. We review some volatility, and there's a lot to review this week, and a lot still happening as we speak. We're kind of in the midst of an interesting push and pull out there, interesting little juxtaposition, a little tug of war out there. But hey, that's what makes the market, right? The beginning of the day, everything was up strong. Things were on fire. S&P got up to 27.75 out there now. Middle of the session, it seems like maybe the bears got their claws out a little bit again. Dow's already in the red. S&P giving pretty much all that up. Now it's unched right around 27.30, 27.29 or so. NASDAQ, though, still up about 1%. So this is another one of those weird days where it kind of depends what you like to trade, what you own, where you look in the market, what kind of vol, what kind of movement you're experiencing, which we've seen a lot these days, more often than in recent big movements in recent past years where we saw. Usually things tend to move in lockstep. Today, they're moving in degrees of lockstep and not quite the unison we've seen in the past. All this, as the Rock Lobster alluded to, giving us a nice shot in the arm from a VIX perspective. Again, it was coming off. Let's see, how low did we get here intraday? We got down to 21.17. So threatening to break back down into the teens in VIX Cash land. Got as high as pretty much right now, 26.71. We're at the high of the day right now. So VIX kind of coming back in. People, remember, people always think of downside as giving VIX that old pop. Downside equals volatility to a lot of people. And certainly that is the most aggressive boost that we usually see to the vol space. Vol is biased to the downside after all. But movement is movement at the end of the day. So you shoot up north, that's still vol. And so people tend to forget that in their calculations sometimes, which hence volatility remains elevated. In fact, it's up over 4 handles from right when we were about to start the show. It was trading right around, or printing right around 22.35. That was 6 handles higher from a week ago. Now we're another 4 handles past that. So we're 10 handles higher than where we were last week, and about 14 from 2 shows back. So quite a range we've seen in VIX land this week. Got down to 15, about 15 and a quarter. That was on Tuesday, and up to nearly 30, 20, about almost 29 on Thursday, 28.84 to be precise. And our old friend VVIX also lighting it up. Coming in, it was at 126. That was 15 handles higher than where we were last show. 34 handles higher than where we were 2 weeks ago, just to put that in some perspective. Right now, we're actually even higher. We're at 132, so we're 6 handles above that. So 40 handles higher than we were 2 weeks ago. And all that means that's translating to some vol out there in the VIX land. VIX 30-day realized. It gets even crazier if you go shorter time frames. Let's just keep it at the relatively sane 30-day. 30-day realized out there in VIX land, 142. Put that in your pipe, Mr. Rock Lobster, and smoke it. 142 realized vol in VIX land right now.
Oh, yeah. We are in zone 4.
Zone 74, you want to say? Zone 74? You got
zone 4.
You got to zone 4 pretty quick. It was like 1 to 4.
A week.
Forget 2 and 3. No one wants to hang out in 2 and 3. There's no fun to be had there. It's 1 or it's 4, baby. VIX is very binary these days. 1 or 4.
You know what the hardest thing about my zones, because I find that is the easiest way to teach our classes and teach people how to trade volatility and stuff. And then I hear Goldman has zones. But you know what? Their zone 4 is like 26. Like their zone 4 is 26 or more. Like 24 wasn't good enough for them, so they had to go to 26.
That gets back to the old question I've said a million times in the show. Where is that point? Everyone has that different breaking point for VIX, right? Where is that take your ball and go home point? Obviously, it's not 26, but still, they start. Obviously, they're deep. So maybe they're a little bit more risk tolerant than you. They can handle a 26. Whereas you get to 20, gets past 24 for you, you start to get the cold sweats.
I start looking for. The old saw, when vol's low, you sell it, and then when vol's high, and then it goes higher, you buy it. Just because realized vol, everything is just really high. So we have those things. We have higher vol. It's something Mark and I have been, discussing for our vol funds. So we're prepared, which is good. But the way that this is rolling is I think this vol move, and I don't care who you are, this is why you hedge and, prepare for things, but nobody saw this coming. The only thing I thought that was real odd last week was we had massive future premium in the VIX futures. Like that October future, those things were like $2 plus over. Nobody ever sold them down. I think that October future got as low as 1370, and it's probably trading 20 something now. Let me see. I look at this, and it is what's that? October future. It's 22. So, I mean, you got to be realistic. That's quite a pop for them. It was a huge move higher, and besides the future traders, right, would not let those futures come down. Stayed way above my theoretical value for where they should be, and that always gives me a moment that gives me pause. Like, you could sell the future premium, but you don't want to short the VIX. So that's two different trades, by the way. And that's where we have. I don't think the market really knows what's going on. The fact that we could be up 1.5% today, that's a 2016 that's like a 25 type vol move intraday. So there's plenty of volatility after a move like today. Now there's vol on the upside. So as we grind in here, we're grinding into a VIX. I think VIX could most likely. I'm not going to. It's just guessing, right? But it's probably going to close green on the day, and I think folks just don't know what the hell is going on. So it is an orderly unwind or an orderly sell-off, I think, what we had. So at this point, just you kind of sit back a little bit and see where all this China trade, this, that, and the other thing ends up. We're coming into earnings season, and vol is sky high in some of these names. I'm starting to look at puts like NVIDIA, like 210, 200 puts to sell. In Microsoft, par puts. Apple, the 200 puts. Like, there is a bid for all of this stuff. I remember a few years ago, we laughed at the 80 puts in Apple were like $1 bid. And we're starting to see, like, and Apple's made a heck of a lot more money than 3 years ago when we had that mini Volatility that August. But vol is pumped into earnings for all of this stuff. So the earnings have been pretty good, and the banks came out with pretty decent earnings. So it's one of those things where, all right, well, companies are making money, but the stocks aren't going up. So at least, starting right now today in this earnings cycle. So, I mean, we'll see what happens. But the only thing I can say is we're going to have more. It feels like more vol, not less.
That certainly seems to be more vol is pretty much. I think if you had to describe this week, how would you describe this week? More vol, I think, is a very concise way to sum it up. There is more vol this week than there was less. I'm just looking at you're right, but your buddy Soft. It sounds crazy to say things like 200 puts, in NVIDIA, and like that just seems like a ridiculous level for an NVIDIA. But you forget that it's, what has it quintupled over the past couple of years or even more. It's been on a crazy, just explosive run. I remember we were talking about it and it was nothing, going into that CES a couple of years ago, and all of a sudden everyone said, well, let's buy NVIDIA. They're making all these mobile chips. People like mobile. And then bam. And then crypto and everything else, and it's just been off to the races for that name. 200 puts. That seems like crazy.
$4.
Yeah, the par puts.
Cycle.
I'm looking at your par puts here in Microsoft, and these are obviously the expiring on the 26th because they have the earnings cycle in them. If you want that extra juice, those are about trading about 85, 90 cents right now. So that's some juice. Granted, you're gonna have to take that through the cycle, which is not our favorite thing. But if you want that juicy, hefty bid. Or are we looking beyond that, Mr. Rocklops? Are you looking to like November or something?
I was looking like November. I'm looking for, I'm thinking election. So I have you want my closet theory? Here's my closet theory. We have all this market turmoil. Trump's back channeling like crazy with the Chinese. The market's selling off now, very dramatic. And he comes in with an 11th hour deal with the Chinese.
Are you looking for a new October, November surprise kind of thing?
And that's why I'm trying to I'm starting to look at the 3000s, the 300s and SPY. I'm trying to just find really cheap ways. Basically what I'm saying is massive leveraged upside that doesn't cost me anything, and maybe finance it with some of this, way downside Q stuff. Like if the Qs are down another 10, 15%, I don't mind maybe taking some delivery on some of these. I like NVIDIA below 200 from 300, stuff like that where, I don't think it's going to kill me long term, but try to build that leverage upside. And of course, then you buy strangles in the vol products in the meantime, and you have a real potpourri of you've got kind of inside gamma and then outside premium to pay for it. So there are ways to structure lots of stuff like that if you want to do it. But it feels like, there's always so much drama coming out of Washington that why not just, instead of fight the drama, embrace the drama with a trade? Why don't you just embrace the drama trade, where you can have that big sling up if something dramatic happens. I don't know if it will, so that's, you can hedge a little bit for that. But because if it doesn't happen, I could see things getting a little uglier, like this rate thing, government debt thing. Everybody starts really actually worrying about it as opposed to what they've been doing up till now, which is not worrying about it. All those things could happen, which of course is why you love the vol products, because they provide fine hedges even when the volatility is this high.
I should warn you, by the way, sir, that all this talk of potentially buying some volatility, I just want to let you know the VolX crew are going to be in town next week for the FIA show. There's a chance. I know we'll get Bob, but there's a chance we may have Mr. Don S. lurking around next week. So you better watch yourself. You better watch yourself with all this vol buy-in talk, sir. He will take you to the task.
It's like, why are you buying vol when VIX is 25?
He'll be like, what kind of idiot are you saying to buy vol at any level, let alone when VIX is 25?
You're a special kind of idiot.
So just prepare yourself for a good tongue lashing. That's not a guarantee. I don't know, but we'll definitely have Bob in studio at the very least. He's much nicer on that side, so don't worry. He won't be as harsh with you, but just prepare yourself for a potential tongue lashing as we move on to look at the old VIX futures. And like I said, these things are moving on. Mr. Rock Lobster, I think the technical term is it super backward? Is that the term we're looking at right now? Super duper really backward?
Super. So I have 4 terms. I've got contango flat backward and extremely backward.
Oh, so you actually have VIX futures zones as well?
I actually do. Not only that is I created a whole trading program around every facet of how the VIX futures trade versus where the cash is. So literally, it's a massive matrix where no matter where VIX is and where the futures are, I've optimized the trade for it. And that's what I teach to my pro clients, people that have gone through my program. So this is actually a very what we'll call a special place in the curve because we have really high. I would say we have a high VIX, right? We're in zone 4, and we have an extremely backward curve where cash is higher, and the front term futures higher, and we are backward to the long term to May volatility. The May future is looking a little under 19 right now. So Nova's over May, and all the other futures are basically just a tick. The Ds between May are just a tick within each other. So this is what I call extremely backward, although it can get crazier from here as far as how extremely backward you go if VIX starts jumping to 30 or 35 or something like that. But we're in what I would call the extremely backward phase, where any day you wake up you could expect 1.5% to 2% per day. So you put on a trade right now, and if you don't think the market's going to move 1.5% or 2% a day, you are fooling yourself. So you have to think about it the right way, and you don't think anymore like you did when VIX was 11. You have to think VIX as 25. It's a massively different. You're playing at a different blackjack table, so you have to change the way you think about everything. Now, as far as long-term investor goes, you're like, okay, well, NVIDIA 200 puts or Microsoft 100 puts or stuff like that. Where you're like, wow, I have an opportunity I didn't have, 2 weeks ago. Like 1,000 puts in Google again. Like, oh my gosh, stuff like that is starting to come into play. I don't sell naked puts. I like selling put spreads. And then I get to decide if I want the stock. So I'm not usually that greedy. But all of this stuff is around. And it wasn't around 2 weeks ago. So, when you're looking to position a trade or add stuff to, let's say a portfolio of stocks, now you're looking because this is an opportunity. It doesn't mean that this is the bottom. It's just the market is moving a heck of a lot, and the premium is pricing it, but it can be deceptively. You could find deceptive bargains even with volatility this high. So again, all you have to know is where to look. And that, of course, is part of education and just learning about the options market itself. And that's what we've got. So we are in an extremely backward, I would call this is so this just so you can go nuts, Mark. We're in zone 4. We're in an up zone 4, extremely backward condition, which is a certain tranche of trades.
We got to work on your branding a little bit. How about like DEFCON 4 or something like that? You know, something a little bit catchy. I don't think that's trade. I don't think the Pentagon will let you use that. Why not? Run with that.
We can come up with something, though.
The danger
you actually
zone.
Come up with all our best names anyway.
The danger zone, then you can play the music. I mean, come on. I would pay for the room in the newsletter just to hear the tune, you know, just to hear it. Oh, am I getting the music today? Open my email. Oh, yeah, it's playing. Oh, yes. I know that. Now I know something's happened. I'm getting danger zone. Just pay that licensing fee to Kenny Loggins. It's worth it. He'll cut you a deal. It's for a good cause.
I just invented my zone 4 name. Goldman Sachs and the 26 VIX. Plah! I have the danger zone.
There you go. I mean, here you go. I'm here just to give you free branding advice, if nothing else.
I appreciate that.
You mentioned how deceptive these markets are. Well, they're turning as we speak, Mr. Rock Lobster. Just wait 2 minutes if you don't like the market, because the worm has turned again. We are now firmly back in the green. S&P up to about 27.5 now, so up about, looks like about 12 handles from where we started. Actually, almost 20 handles from where we started the show. It was close to unspec, so about 16, 17. And then we've got Dow back firmly in the green, now up 0.5%. It was actually down when we started the show. The tech-heavy NASDAQ up nearly 2% now. And all that green means VIX Cash deciding to take a break now, Mr. Rock Lobster, off just slightly. Ever so slightly back shy of the 25 handle. So if you don't like the vol right now, Mr. Rock Lobster, just wait 5 minutes. It's like the weather in Chicago, right? It'll turn your way eventually. Just give it some time. So all this means, like you're saying, we're seeing, I think the Rock Lobster's not so sexy term is extremely backward. You know, we can call it DEFCON 4 danger zone kind of backwardation if you want to go a little bit more fun here. But the futures are pricing in about a 3.5 handle premium to the cash, so AKA super backward. Usually it's the other way around. The futures get a little bit of a bid, AKA contango. When things get crazy like this, the cash tends to take charge, take the premium, take the juice. And so that's where it is right now. It was about 3 handles when we started this conversation a few minutes ago. Now it's about 2.5 handles. That shows how much this stuff is just moving and shaking and rocking around. If you go out about, again, the backward, also that bid to the front month future there. So if you go out 2 months, it's even more. It's about 5 handles, 5.5 handles actually out to 2 months from the cash, a premium from the cash to the 2 month out future. So work that through your head if you can. It gets a little funky. It gets a little crazy when things get extremely backwards. Speaking of things that are crazy, VIX Options this week, where the technical term was off the chain, as the kids like to say out there today. So far, the ADV is 540 right now, 540,000. That's up about almost 100,000 just in ADV from last week. So you know how much it takes to boost a big number like VIX and a big volume like VIX and boost the ADV up 100,000. Things got to be rocking and rolling. And that's exactly what we saw this week so far. Like I mentioned, already north of the ADV already. It's a little bit past noon here, almost halfway through the show. Thursday, just tick under 2 million, 1.99 million on the tape. Wednesday, 1.725 million. Tuesday, 910,000. Monday, the laggard, a comparatively paltry 883,000. We laugh at that now. VIX call the put, ironically, with all this moving around, Mr. Rock Lobster, VIX call the put hasn't really changed. You think you whipsaw it around a lot in the wings a bit. People will be taking off some puts, taking off some calls. I guess because you hit both kind of wings. You started off low and kind of went high. You think it would hit the calls a bit more, but no. 2.7 to 1, off slightly from last show. So people haven't really unwound a lot of their call positions, maybe that you might think, given what's been going on. If you're kind of wondering to yourself, you say, self, how does this compare to the VIXocalypse from back in February? Well, we have the data for you. We did that math for you. Don't worry. So back on the big crazy day of February 5th, the VIX options did 3.6 million. So not quite double, but close to double of what we did on the big day this week, which is just a little bit shy of 2 million. And then on the 6th, which was even the crazier day, we did 4.1 million. So then you are talking double what the big day was this week. And then the 7th was about 2.4 million. And on the 8th, it was about 2.5 million. So pretty much every day in that VIXocalypse period was still sizably more volume than we're seeing right now. So this is crazy. This is hardcore. But remember, VIX also got up to, into the pushing the 50 handle up there. So it was a little bit of a different beast. We also had different products at work back then, like XIV and others that could help exacerbate this VIX upside move that we saw in February that don't really exist anymore. So that's also maybe putting the brakes on. That's actually a good topic, Mr. Rock Lobster. What are your thoughts there on the implosion of things like XIV? You think they've dampened down what we saw on the upside? If this was back in February again, and we had those products around, could we be threatening, a 40 plus handle, 50 handle this time around?
You know what? Because it's a lot of it was the same. That is a little funky. I mean, wasn't this remarkable by how measured, kind of like, okay, the vol's up 3 points, the vol's up 3 points, the vol's up 3 points, so. It didn't feel like there was a scramble to buy any product. So I have to, at least just from an observation point of view, I have no evidence to back this up at all. But, the fact that XIV is gone and SVXY has been basically, neutered, that does take some pressure off some liquidity pressure off these products. And as I recall, wasn't there those massive dump of money into the SVXY literally like days before that crash? So I think this is just an ordered sell-off, just like, when you and I were young and skinnier and much more handsome back in the 90s and early 2000s or whatever.
I don't know what you're talking about. I'm 27 years old, so I don't know what the hell you're saying. I don't remember these 90s. Those are vague. Those are on the peripheries of my consciousness, the 90s. I don't know what you're talking about. I was like 3.
You were 3 years old. So this is just there's no Fed coming in saying we're going to lower rates. There's no, what it is? It's just stocks got really expensive. They went down. Nobody's saying anything, business as usual, which I have to say, instead of all this trying to micromanage every tick in equity markets, buying another $1 trillion of the government bonds, I think this is hopefully will be a healthier, healthier way to go. But I look at this and I say the fact that those products aren't there and the sort of straight line stair step up with volatility, which is usually how it trades. I'm gonna have to say having those products gone has probably helped contribute to less volatility, or at least in the vol futures and stuff. So it's just an observation, but that's what it looks like.
Yeah, if you're one of these guys loading up on the 50 calls in take your pick, VIX or VXX or any of those names, you're probably a little sad right now that you didn't get that extra, kick it into high gear that we saw back in February, where it really kind of just exacerbated all of the madness and all sorts of fun ensued. But of course, those products ended up being the death of themselves. So I guess you only have them to blame at the end of the day. So much paper going up this week, we can't really sit there and parse individual trades. It's kind of like spitting into a hurricane. There's just so much. Pick a month, pick a strike. It was lighting it up. So let's do the top positions out there right now. Coming into today, the big size open VIX positions right now, the hot VIX strikes out there. Number one with a bullet, still the OCC 13 puts. They maintain at the top of the mountain despite all the madness that has gone on this week. 324,600. I could probably see an argument for why you wouldn't want to take those off this week. But nothing else has amassed to usurp it this week. The closest we got is still our old friend, the Nove 20s. Those are still number 2. So it's kind of weird. We had that bet that everyone was saying was putting on that, it was that risk reversal, Mr. Rock Lobster, the OCC 13 puts versus the Nove 2026 vertical. You'd think in this environment maybe you'd want to unwind some of that, and yet the Nove 20s are still number 2 with 300 and about 220,000 contracts open. Number 3, the Nove 21s with 214,000. Number 4, the OCC 12 puts. They were I believe they started legging into a vertical there for a while too, the OCC 13 12 put spread, so that has lifted them up. Also, obviously doing some paper this week as well. The OCC 21s, 207,000 at number 5. Number 6, the Nove 26s, like I mentioned before, still about almost 200,000 of those open, which is a little bit less than they were, obviously. So maybe some taking some off the top there, but that was a vertical, as I recall. So that's the short leg. That'd be an odd one to take off. And then OCC 25 with about 195,000. Number 8, the Nove 13 puts. A 13 put strike remains active at 175,000. Number 9, The Feb 37 halves. Remember, we talked about these rolling from a Dees, I believe. I think it was Dees 47 half down to Feb 37 half last week or 2 weeks ago. Well, those are still open, number 971,000. And rounding out the top 10, the OCC 20s, comparatively reasonable, about 158,000 of those. Total of about 9.5 million contracts open, about 6.9 million on the calls, and about 2.6 million on the puts. I will say, there's so much going up. It's hard to parse what was going up this week without really getting into a lot. Today, we're seeing the big strikes that are really trading a lot today are the OCC 22s with about nearly 50,000 on the tape coming into the show. Those numbers have probably changed since we started the show. OCC 37 halves trading it up today with about 40,000 of those as well. The OCC 20s and OCC 30s are number 3 and 4 with about 36,000 and 28,000. And around our top 5 here, we got the OCC 21. So it's a bit of an OCC call strip trading today in VIX land, which is no surprise. Also looks like a bit of a vertical was going up, the OCC 2230. It's like paper buying one and selling two, doing that. Might be closing, though, probably closing, given the fact that there's over 100,000 on each strike today. So a little bit of some 1-by-2 ratio action going up there today, which, given a day that ends in Y, chances of 1-by-2 are going up in VIX land. Mr. Rock Lobster, I know it was kind of just an explosion of paper out there in VIX land this week, but anything in particular resonating with you or catching your eye this week?
It's I would say like 14 level puts, 13 level puts, all kinds of stuff last week that people were piling into, and then they all are going to go the way of the dodo, it looks like. So that was sort of past puts. This week it was kind of a menage of trades, so it was hard to say any one particular thing. The only thing I would just say is just like VVIX volatility is as high as it was. This year, I guess the Volatility was the only other time. So all that volatility exploded. I think a big part of why the November is still open is because the no future's only 19 and change. It hasn't ripped high enough because we have some like November condors on that we bought for nothing, like 29 cents or something. And they're very in the money, but we are not getting, the November future is doing what it does. Or this second month future, it's kind of lagging a little bit. It's definitely higher, and they're good. But somebody wanted big money on their Nov 20s. They might have paid like $2 for them, and they're trading $3.40 or $3.50. So they're not quite ready to close them. Although volatility is 180 in them. They're not quite ready to close those. So that's one of the tricks hardest part with VIX is just, when do you take your money and just go home? You're like, okay, the wall's up, things have exploded. I'm going to take my chips and I'm going to leave. So I think that's one of the, it's definitely like a little practice, and I still screw it up every once in a while, but and I think that's part of, why you're seeing a lot of open interest, because a lot of that Nov stuff and, it's popped, but just it hasn't quite enough yet for somebody to hit the old close.
Yeah, that's a good point. We were just talking about that earlier in the show, about how the 2-month future was at a deep discount to the cash, far obviously, and that's what's going to happen with the second future. It is going to lag a little bit, like you mentioned. So that's a good illustration to our audience of just how hard it is to time this stuff right. You do it all ostensibly right. You set up the position the way you want it. You kind of do a little bit of a combo. You take advantage of the premium there to do in the nearer term contract to sell the OCC to buy the NOV. So you're structuring it all right from a time decay perspective. But because you did that, you don't get the bang for the buck you would have had if it was all OCC. So as a result, the trade is still open. So they set it up, and it's a huge trade. Contracts. And obviously they have other stuff on that's probably maybe looking that they have going as well. So they're probably maybe focusing on that. There's obviously other positions going on against these big options trades. They don't do these in a vacuum. But still, just from the options perspective, you're right. It's so you do everything right, and still you're right. That VIX future hasn't really caught the bid that maybe you'd hope for when everything else is the world's on fire. VIX Cash is threatening 28. All the things you want to happen are happening. And yet, possibly because of that unwinding we saw earlier in February, there's just not enough out there to kind of lift the whole front of the curve like you need to really give it that extra, kick it into high gear to actually make it worth taking off. How terrible would it be for this guy? Obviously his other position, he'd probably be laughing, but on the option side, just purely the option side, how sad would it be if it never really got there and came right back down and he had all this set up it just kind of went away. That shows you just how challenging it could be from a timing perspective. This stuff, you do it all right, and it still is. I mean, he's looking good. He's got roughly 2x on the options side of it, so he could take it off and still be happy, but it's not quite the 4 or 5 banger maybe he was hoping for. All right, let's go out to another product you guys like to watch a lot out here. It's called VXX. You may have heard of it. Right now, this one's been all over the place as well. Coming into the show, it was about 35.5, so that was roughly 9 handles higher than where it was last show. Let's see, right now it's at 36 and roughly almost a half, so it's up about nearly a point from where it was, and it's still off half a handle on the day, so it's a crazy day out there. The ADV has popped a little bit as well, up to about 255,000 contracts, and it was a kind of a rock'em sock'em week out there this week as well, about 700,000, just a tick under. Same thing as VIX, a tick under 2 million in VIX on Thursday, a tick under 700,000, 699,000 on Thursday. So both vol products couldn't quite make that next level yesterday, which is kind of interesting. Wednesday, 614,000. Tuesday, 422,000. Monday, 419,000. Again, we did the math for you. If you're curious, how does that compare to the VIXocalypse of February? Back on the 5th of February, VXX did 962,000 contracts. On the 6th, 823,000. On the 7th, 606,000. On the 8th, 646,000. So VXX came a little closer and actually exceeded some of the latter days of that this week, whereas VIX did not. VIX did roughly half the volume that it did back in the VIXocalypse night. Again, partly probably to do with the fact that those products are not there anymore to drive paper in the underlying VIX complex. In terms of what's open in VXX land, nothing's really changed out there, at least in the top 5. That's huge. We got, the Jan 10, 15, and 5 puts, 1, 2, and 3. That's kind of like clockwork every week, probably because the meatball keeps buying these 10 puts, keeps adding to the OI. Number 4 is the No 45s with about 67,000. Number 5, the Jan 33s with 53,000. So there are some calls in the top 5 out there, but it hasn't been size change. Looks like the biggest change actually maybe the Jan quarter puts with about 44,000 open. They've changed about 5,000, maybe a little more over the course of this week. And again, the same deal as before. This is kind of a hard one to parse because there's so much paper going up this week. But looking at trends right now, just what's lighting up the tape right now, the top most active option out there right now in VXX are the OC 34 puts. So those are pretty juicy in terms of they were deep in the money just last week. So now maybe a little bit more attractive. Paper Goblin looks like about 13, almost 14,000 of those up today, as well as looks like the OC 32 half puts in the weekly, so expiring on the 12th, which are today, going up about 12,000 times, maybe some closing, hopefully. Actually, that's opening paper. So opening 32 half puts going up today, Mr. Rock Lobster, 12,000 times almost. So someone playing with a little bit of fire out there in VXX. Let's see what those puts are going for. I can take a guess, but you never know. 32 half puts. Let's see. Yeah, you can get all you want for 2 cents, Mr. Rock Lobster. How's that looking to you?
I have to say, as enticing as it sounds, I don't think that's going to happen today. I don't think it's going to happen today. If
you're going to spend 2 cents, you might as well go up a half strike and go to the 33s. You can get those at 3 cents now, too.
And get them for 3 cents. What the heck?
Yeah.
Go live big.
Or maybe you work a 2 cent bid for the 33 half puts, which there is right now, and maybe you get filled there. And then who knows if you want. So you can go up a strike or so if you are so inclined. You're still roughly 3 handles out of the money, but you never know. It's one of those crazy days, Mr. Rock Lobster. You take a flyer on 2 cents and maybe you make a nickel 1,000 times. There are worse things.
Maybe.
There are worse things. Maybe. Probably not. It's one of those scratch-off lottery tickets. Probably not going to happen, but you never know. Maybe you make anything catching your eye in VXX land, sir, before we open it up to the unwashed masses of volatility?
The funny using those 10 put is actually helping for margin on diagonal put spreads. So an unintended consequence.
There you go. See, just margin benefits alone, it's probably paid for itself, right?
Yeah, I think so. So I'll let you know in 3 weeks, but for right now, yes, it looks okay. So, but the as far as VXX goes, I think today, if I'm looking at the vol in here again, just for the listeners, you want to look at an indicator. Look at volatility of volatility. When volatility in VVIX is going up, or I'm sorry, in VIX any of the vol products, VIX, VXX, VXY, take your pick. That is that's sort of a danger Will Robinson thing. So it came in a little bit this morning, but not as much as you would think. And as of right now, I mean, there's a little bit of bid for volatility again. So it's, you have multiple days, and I think this is another thing. There's a multiple days where you have bid for the options. You have a bid for vol multiple days. This is like 5 or 6 days in a row where the futures keep trading higher. That is not the sign of a market that wants to capitulate, in my opinion. So, of course, my opinion's like a belly button. We all have them. But, you want to really see that vol come in and somebody come in and they just want to smack it. And, VXX vol is not up a lot today. It's up 3 or 4 points, depending on the term. And it should be going down if the upside is dead for volatility, and it just is not yet. So I would say that's an indicator in itself. You have SPX is up, the Dow is up, the Qs are up, and VIX is up 25 cents. That is all, to me, that's crazy town. And if I had to say anything, the vol's been leading the market, and it would not surprise me to see Dow negative on the day, SPX negative on the day, and the Qs give back some of their gains. So we did have kind of some nifty trades in our vol newsletter this morning, so we've been able to navigate this actually kind of easily, to be honest. But you got to be careful. Just because VIX is 24, zone 4 doesn't mean that's it could be anywhere from 24 vol to 45 vol. We just don't know. And, you have to be very aware. So, the best indication is continued bid for volatility is a great indicator. And right now, that's pretty much what we've had. So it goes in fits and starts as vol goes up, but the bid for vol is not dead yet, I would say.
What isn't dead as well are your questions. We got a ton of them, so let's get to it with some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, we got a lot of questions, a lot of just comments. People want to just vent their spleen. I feel you, like our friend here, DelVecchio, who just says, "Dude, WTF? #VIX." I think a lot of people feel that way. What do you think, Mr. Rock Lobster? Just WTF?
I'm not going to disagree. That's what happens. I've seen it enough that it doesn't surprise me too much anymore. And I'm just looking at some of the offers. Oh, I could get a couple of fills here at the end of the day. So yes, I think the problem is everybody just, they have recency bias of 2017. They have 9 volatility in their head. And you could tell people that was crazy outside the historical norm, and they do not want to believe you. So, doesn't mean it can't happen again, but holy guacamole, you might be waiting a long time till you see it. So, at least this week.
DelVecchio, we're with you. WTF all around on this one. We're with you on that. I don't know if you saw this, Mr. Rock Lobster, but Kramer tweeted something out about VIX being $30, and people got on him all over the place, including our friend contango trader who writes in all the time to the show. He said he reminded Kramer that it's not $30, it's 30 points. Or 30% annually, or 1 standard deviation, all this kind of fun stuff. So everyone's getting on poor Kramer. The poor guy. He doesn't.
By the way, he's an option pick client. We love him. He's a very good trader.
He's a very active guy on Twitter as well. He hits us up all the time with all sorts of interesting comments. But yeah, no one giving poor Kramer a break. The guy doesn't know his VIX. He thinks all stocks are dollars to him. That's just what he thinks.
Marx is like his in-house counsel.
I know. Mark should be slapping him on the head.
He's his concierge.
When he does that, Mark should slap him on the head. Big, hey, dude, come on. We've talked about this. It's not dollars. It's points. But I've even said that myself. But I say, oh, VIX moved $1, and you catch yourself, oh, wait a minute, but I talk about 8 million things a day. The difference between me and Kramer is I actually know better. I just, I get busy. Kramer doesn't know better, so leave the guy alone. All right. The Kramer, even though I'm not really a Kramer apologist, this way I'll feel for him a little bit. Speaking of which, a lot of people were also sharing us this tweet. It's been making the rounds. I don't have it here. I forgot who tweeted it, but someone tweeted it out. Something along the lines of, there's a special place in hell for people who quote VIX as a percent. And it got a ton of retweets and likes out there. So that one kind of just made me crack up, because I know your cohort there, the meatball, he takes deep umbrage at people who quote VIX as just as a percent. So VIX up 46% this week, when it's already a percent. We've had this conversation many times. I just thought that was a funny tweet. So Mr. Rocklobster, you have to look for that one if you. I'll see if we can find it here for you before the end of the show. Speaking of taking umbrage, people take umbrage when I had the temerity last week, Mr. Rocklobster, to say anything negative about the beloved TVIX. God forbid I remind people that, hey, maybe it had some structural issues not too far back. And maybe you want to remember that when you're trading this product. I know it survived February, and that's good. It's one of the last of the Mohicans now in the VIX space. So hey, go figure, the vol space. So you got it. It survives by default. It's a viable product by default because it's still there. But I just wanted to remind you guys that maybe you want to look a little bit farther back. I know the volatility space has a notoriously short memory, and people like Martin Ryan were taking umbrage with that. He said XIV imploded, because I said TVIX imploded. And he said, no, XIV imploded. TVIX is alive and kicking. I've used it for years. The other options have their advantages and disadvantages too. Good luck trying to get a reasonable fill from options traders in a fast market. At least with an ETF or ETN, I have liquidity. Again, and I don't mean to besmirch your beloved product out there, listeners, but I just want to remind you guys that it had some issues not too long ago that had really not much to do with the underlying market. It was with the structure of the product itself and how it dealt with the flows that were going into it. So something you want to be aware of when, I don't know, do you still use TVIX, Mr. Rocklobster?
No, I actually just pulled it up on my my tower here just to take a look at it. I don't use it anymore. I should rephrase. I never used it. Because it came into my radar screen as like a broken looking ETF, so I just sort of shied away from it. But it doesn't mean it can't go up with volatility. It's just I don't think it's a very well managed product. So it's just one of those things where it's like going to the crappy burger stand. Why go to the crappy burger stand when you can go to the good burger stand? So
I like that. I'm going to tweet out that analogy. I'm going to put your handle on it, and then people can get mad at you instead of me. How about that? TVIX is a crappy burger stand compared to the premium Au Cheval burger stand. I'll put that out there. You're going to get the hate. There's the TVIX defense force out there, and they are a motivated bunch, shall we say, which is interesting. TVIX. Yeah, you're right. It's never been one of my favorites either. But people out there, hey. To each their own. If you're making money on it, good for you. Just be aware that there's issues with it. As Mr. Rocklobster says, it's a crappy burger stand. I love that analogy. All right, what do you got here? Grigs. Grigs wants to know. He has an oddly worded question. Let's see if we can get to his intent here. Grigs wants to know, why would shorting volatility during VIX futures contango fail? Why would that fail? Well, I don't know, Griggs. Look at the last 2 or 3 days and tell me how that worked out for you. Because we were coming into a contango pretty much, I think we started the week. It might have been a little bit backward even to start the week.
It was record contango last week. On Wednesday.
Yeah, so
record for 2018, I should say.
Let's go back maybe a week then, just to get when the exact contango, because we were in contango right when all the sell-off started there. So just go back to that date and you can see how it could fail right there. That's pretty much a case in point. So you don't have to look back too far to see when that would fail. And of course, VIX futures are pretty much in contango the vast majority of the time. So that means most of the time you're shorting vol when futures are in contango. So when it fails is when they go to backward while you're shorted. That's when it fails. Because that means something crazy is usually going on. And if you're naked short, like a lot of people out there, you can get caught. So yeah, Mr. Rocklobster, he's pretty much asking when could shorting vol fail, because that's pretty much 99% of the time you're doing it in contango, right?
Right, exactly. I mean, yeah. 80% of the time you're in contango, and then there's the 20% that's not. So it is a slippery slope, but there's lots of, let's just say there's lots of cool contango trades you can do. So that was my whole volatility newsletter. It's a way to be long vol all the time and just try to have the market pay for it, which generally, with a little practice, and you can do it. So it takes some work, but it's always the opposite. It's never how anybody thinks it's going to work. So if you look at the contango in the futures and just think it's free money and you're going to get free Starbucks coffee for life, it's not exactly how it works. And I think one thing too is, I think, we had a lot less future premium overall in the last, I would say, 4 months. And VIX was kind of in that kind of low level, and there wasn't a lot of back month future premium overall. So it seems like a bit of the shine has been taken off that stuff. And I don't have an answer for that. It's just an observation, but we'll see how that all plays out.
I'm in the process of tweeting out your burger stand analogy now, so you can feel the love that I've been feeling over the past week. Oh, excuse me, sir. TVIX is not a crappy burger stand. It is a delicious, delicious place for premier cuisine. So look forward to that coming to your Twitter inbox forthwith. All right, more inbox stuff here. Jason Nolk asks a lot of confusingly worded questions this week. He wants to know suggestions on how to be best net neutral here. How to be best net neutral here. Well, if you want to be neutral, the most neutral thing you could do is go to cash. So if you're worried about this stuff, if this stuff's not making a lot of sense to you, and I wouldn't fault you for that. As our first listener said, WTF. It is a kind of a WTF market. If it's just too crazy for you, go to cash. That's the most neutral you could be. And then kind of wait and see and then pick your opportunity. Maybe he means maybe he needs delta neutral. I don't know, unit neutral. There's a lot of ways we could intuit neutral. I'm going to intuit on the positional sense, in which case I'm going to say go to cash if you can't put your hands around this stuff, Mr. Rock Lobster.
Yeah, I mean, you could go to cash, or what I do is you think of, okay, well, this is where we are now, and you estimate where is VIX, right? Because we have a unique cycle for VIX this year in November where it expires the day before Thanksgiving. A lot of things are rolled into that. December, potentially much lower vol than we have now, like back to 11, stuff like that. So if you want to be neutral, you think of where VIX is going to be in time, and you position around that. So you could create a strangle right now in VIX for very, very, very low dollars, like crazy low dollars that you would be quite surprised. That is almost in the money as we speak. And if we do get that rolled down, that could actually create a delta neutral strangle. But if the vol does blow up, you're going to make yourself some money. So there are a lot of ways to do it, to be honest. You just have to learn how to do it. That's why we have an education company. People come to us. We just had a trader. She's been trading for 20 years, and she's a great trader. She's like, I can't believe how much I learned. Like, there's something to this volatility stuff. So it is something you can learn, but a lot of it is like not in books, because the stuff in books is mostly just, this is a call, this is a put, you own a straddle, it does this. That, it's good to learn a lot of the basics that way, but it doesn't teach you really about application. So application is about what's the condition now, what do you want, and find the best risk reward to get it done. And right now, I would say we have volatility is extremely high. It's going to stay high for a while. Don't know how long, but it doesn't stay like this forever. And what is the best way to ride that? So to me, VIX is still a great vehicle for that. It's actually more fun to trade right now, or to put stuff on, because that's where the opportunity is. So, take a look at it and see. But anyway, that's where I would be delta neutral in the nose cycle in VIX. And there are lots of ways to do it. You could actually create a position where VIX settles here. You would be up a ton of money. So you could theoretically create a position that has no real decay in it. So again, more tricks of the trade and stuff like that. But there you go. That's my answer for that one. Take a gander in VIX and Do what you will.
Take a gander, indeed. Speaking of gander, and I'll look gander on what the people are sending in. They're liking your analogy so far. RA saying it's like McDonald's versus In-N-Out Burger for the TVIX versus others. So maybe you will get some. I don't know. How come I got all the vitriol and you're getting the love here?
You just have to be more clever. You just have to be more clever.
There we go. There we go. Speaking of clever, people sent us a lot of great clever things this week. Reformed Trader sent us this great GIF of. Or GIF, however you'd like to pronounce those out there in the pronunciation wars. Saying, well, this has been VIX first popped earlier this week, and he said, a lot of people are popping Tums today, and he showed a picture of, I think it looks like it's Christian Bale from the Big Short movie, kind of just passed out on the floor, Mr. Rocklobster, covered and surrounded by papers and everything else like that. And just it kind of brought a smile to my face. I thought that was a good one. VIXologist was saying, 4.75 million of VXX was redeemed yesterday. This is from this. You got this today. About 170 million worth of that appears that some folks on the long side are cashing in their chips. So yeah, but there's all sorts of fun vacillations going on out there right now. So if you don't like it, like we said, wait 5 minutes. Or if you're in the WTF mode, like a lot of our listeners, maybe you take your ball and go home for a little bit. There are worse things to do too than being stuck in positions you don't understand or don't make a lot of sense to you. So keep that in mind. Cash is a position. It is a neutral position, but it is a position. So, all right, let's keep on rolling, and let's see if we can embarrass ourselves once again. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Like I mentioned at the top of the show, spoilers. We didn't have this one. I was at 12:55, so a wee bit shy of where we are. And I think you were the meatball last week. I forgot, Mr. Rock last week. You were at 13 and a quarter, whichever one of you was on. So you were technically higher, so technically closer. But if you're off by
is a win.
If you're off by over 10 handles, I don't know if I can count that as a win. Let's make 10 handles the cutoff of shame. And none of us passed the bar of shame this week. By the way, some of our listeners are playing along. You guys didn't do so well yourself this week. In our question of the week, we asked you earlier this week. We said, are you guys... VIX at the time was 18.5. VVIX was at 120. We said, are you guys feeling this, or is this kind of just a blip? So where do you think VIX is going to close this Friday? We gave you four choices: 18 and 19.5, over 19.5, between 16 and 18, or south of 16. And coming into today, the lion's share of you, I think like 38%, were at between 16 and 18. That has obviously shifted with the paper in the last couple of days, as it's been demonstrably over 19.5. So 35% now saying, oh, hey, over 19.5. Go figure. I picked that one now. But a lot of you earlier in the week were picking a lot lower vol as well. So there you go. The crystal ball, more challenging than we thought. But that said, neither of us passed the bar of shame. So I'll be magnanimous, Mr. I'll be a good host. I will let you go first.
I appreciate that. Now, I did call VIX going over 20 in a heartbeat on Tuesday's. Didn't we do like a funky? Oh, Wednesday. It was a Wednesday. Remember, we were at Duke.
Yes,
on the other show.
We were live from Duke University. Yes, at the time, and we were close to 20 at the 19.5. It wasn't like we were at 12. It wasn't like we were at 12. We're hitting 20.
No. We were like 18.5, and I'm like, we're definitely going to 20.
You did say that. I'll give you that. So yeah, for that you earn your chance to go first, sir.
So that was I got like a quarter crystal ball. That was a quarter crystal ball. I think now here, where are we? We're trading 25-ish. This is a tough one, but I think we're going to be higher than we are now. So I'm going to say, I'll say 26.01.
Wow, you're buying what they're selling out there, huh?
Yep.
And I'm starting to feel like Russell a little bit, that I'm leaning on the same side of the train a lot this year. But look how well it worked out for him. But yeah, you're right. A lot of instruments are pointing to the opposite, and given the fact that now we're green again across the board today, so including in the VIX land. So there's green everywhere. So it is one of those weird days. So we could literally be anywhere next week, and maybe 100 I wouldn't expect, but we could be close to anywhere, and I wouldn't be that surprised. That said, I'm gonna lean towards saner heads prevailing in the vol space. I'm gonna say we're still gonna be elevated, demonstrably elevated over where we were a week or two ago, but not quite in the juicy stratosphere that Mr. Rock Lobster says. And I wrote it down before you started talking, just so I'm going to say 1765. Put that in your pipe and smoke it, sir.
Wow, that is a bull, and believe me, and I hope we're there, because that will make me as happy. That November prognostication I gave you is not unlike what we have. So, but we'll see what happens. That's clear. That is black and white as we can get from vol, right?
Yeah, maybe my book may be influencing me a little bit, but I try to keep that stuff separate. So I'm putting my money where my mouth is in this one. We'll see. We shall see. I've been on that train it's been doing well for me. I've been crushing it all year long, and now in this last cycle here. This is when we needed Russell on the show, because he'd be buying it all freaking day and he'd be crushing it. He would have been at 30 last week, and he would have been close. He would still have gone over, so he would have lost by Price is Right rules, but he would have been closer than either of us. All right, listeners, that music means we got to get out of here. What a week it has been, Mr. Rock Lobster. So I'd imagine people after all this, like our listener said so eloquently, WTF VIX. So if they're in that mode, Mr. Rock Lobster, they're saying to themselves, WTF VIX, and they want some answers. Where should they go? What should they do?
Man, go to our website, subscribe to my blog. It's free. You'll learn a lot about vol. Take our VIX Made Easy, our vol master classes. Mark's doing a free webinar on Monday. Go to our website under the event tab. We're going to be doing a webinar on weekly volatility, so you actually learn how to trade it next Saturday. We have so much stuff to teach you how to trade. It makes my head cave in just thinking how much I've written already about the subject.
I'm still mad you're not getting all the vitriol on TVIX. I want to come in at option vol. Hit him up. Send him your anger. Send him your outrage. Send him your umbrage. He called your beloved product a crappy burger stand. Let him have it. At option vol to let the man have it over there. And while you're at it, while you're sending him hatred, subscribe to his courses, because why not? You want to subscribe to the course of the man who belittles all of your favorite products. At Option Pit to learn more. And on behalf of the Meatball and all you out there who are slinging yourself some volatility or saying WTF VIX, I know it's crazy town. Just keep your heads down, plug along, stay sane, stay safe, and we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.